we think about capital markets, we often focus on numbers, valuation, earnings, and growth curves, and even those forecasts. But beneath the spreadsheets and financial models, there's something far more human at play here: emotion. And emotions are not just background noise in investing, they drive decision-making. Fear and greed are, as we know, the most obvious. Fear makes investors sell too soon, missing out on those long-term gains, while greed pushes them to chase that momentum, often buying at the top. But there's more subtlety here. Confidence, trust, even hope. These shape how capitals flow. Behavioral finance studies consistently have shown that investors don't always act rationally. They respond to stories, to vision, and to the emotional cues they pick up from leaders and companies. And that's why when a company presents its projects, the numbers alone rarely move the markets. A feasibility study or technical report, of course, is absolutely crucial, but what resonates is how that data is framed. Investors want to feel your conviction. They want to believe in your team, the purpose, and the impact. A mining project isn't just tons and grades, it's the story of how it will supply the copper needed for a renewable economy. A biotech startup isn't just about clinical trials, it's about the hope of extending lives. And a fintech platform isn't just an algorithm, it's the promise of democratizing finance. And when you connect your project to a bigger human narrative, you tap into the emotional drivers that influence capital allocation. Now, this doesn't mean abandoning facts for feelings, and capital markets credibility is built on data. But data without story rarely sticks. The strongest companies layer rigorous fundamentals with an emotional anchor. Why does this matter? Who does it help? What future does it create? That emotional aspect is what investors remember when the market dips, when volatility tests that conviction. A well-rooted story in both numbers and meaning becomes the emotional glue that holds that investor confidence together. Listen, here's the hard truth. Capital doesn't just follow opportunity, it follows clarity and passion. And passion is built on emotion as much as it is on fact. If you don't tell your story with emotional precision, someone else will. Investors are bombarded with projects, ideas, and decks every single day. The ones that break through are not always the ones with the best metrics, but they are the ones that make people feel something real. A clear emotional directive gives investors a reason to stay through those hard times, a reason to double down when doubt creeps in, and a reason to advocate for you when they sit across the table from their own peers in rooms you're not in yet. In other words, the story you tell becomes the fuel that sustains belief long after the headlines fade. So, if you're raising capital, remember this. Investors aren't just funding a balance sheet, they're funding a belief in your team, your purpose, and the future you're building. And as investors, being aware of how our own emotions influence decisions is just as critical as reading the charts or analyzing the quarterly results. As always, these are the opinions of our own and should not be used as financial advice. Know your own risk tolerances and always be sure to talk with your financial advisor. For more information, head to appeton.com. I'm Lyndsay Malchuk, and this is The Market Knowledge.